Good morning. How you guys doing? I'm Dr. Boyce Watkins, and I want to welcome you guys to the Black Financial Channel. I want to do a quick Black Financial report to let you guys know what to expect with the market in the next few months, or actually today in particular, but then next week, and then the rest of the year. There's some interesting information I want to share with you that you may want to consider in terms of figuring out where the market's going to go, all that good stuff. Make sure you hit the thumbs up button, subscribe button, and share button, and all that good stuff. So let's begin. Um, I'm looking at this Bloomberg article, and they're making a really good point. They basically said that there are two groups of stocks that really, are signaling that the economy could be weakening, that the market could be preparing for a dip. Those two categories, basically, I'll read this to you: transportation stocks and small cap stocks. And the reason that they believe that transportation companies and small cap companies and their revenue growth or lack thereof are indicators, what they call leading indicators of economic growth, is because one, if you're not getting, if the transportation companies are struggling, then that means goods aren't being shipped across the country. The business isn't being done at the same clip that it was being done before, and this could indicate that the economy is headed toward recession. Small cap stocks are interesting because a lot of small companies depend mostly on domestic revenue, which is driven by domestic consumer demand, which they say is weakening a little bit right now. So, this is one prediction from the bears. The bears tend to see bearish things. Bears are people that predict the market's going to go down, and that's what they're sort of seeing. Whereas a lot of experts actually don't really know exactly where the market's going. They don't know. They don't know how to really process everything. You've got some announcements coming up from the Fed chairman Jerome Powell, which will be very important. Donald Trump's been dying for him to do an interest rate cut to boost the stock market and boost the economy. But at the same time, he's threatening to fire Powell, I guess, because he feels that he's not, he's not cutting interest rates fast enough. So I don't know. It almost makes you wonder if Powell is going to not cut rates just to make a point to Donald Trump. I know he already expressed his resilience in terms of keeping his job and saying you're not pushing me out or sending me anywhere. But basically, if you look here, there's a Bloomberg article on this topic, and according to Jeff Carbone, who's a managing partner at Cornerstone Wealth, which is a big fund, over $1 billion in management. He says that he just doesn't know where this market's going, and I'll put myself in that category. I can't tell you for sure what's going to happen because there are certain factors that play a part in here in all of this that really defy sort of the natural laws of economic physics. Meaning, you don't know what Donald Trump is going to do, right? If he pushes the trade war with China and really lets it get to the point where you're cutting into muscle and bone as opposed to just cutting fat, meaning that he lets this war go on and on and on, that's going to disrupt the natural economic cycle, I believe. It also makes for a lot of uncertainty, which is not good for the market. Now here, in this article in Bloomberg, they say that data Monday added to the concern basically of a recession when an unexpectedly weak factory output from the Dallas Fed was the third such gauge to miss estimates. While the S&P 500 only slipped 0.2%, the Russell 2000 sank 1.3%, while the Dow Jones transportation average dropped 1.5%. For transports, the sell-off added to its worst performance versus the S&P 500 since 2012. Another day like Monday, and the ratio could drop to the lowest in a decade. FedEx, one of the largest, now FedEx is being hit pretty hard with the trade war also. FedEx, one of the largest components of the transportation average, reports earnings Tuesday, and analysts have warned that trouble looms. Lingering effects from the U.S.-China trade war, the slowdown seen in manufacturing data, and weakness in Europe could mean the shipping company will cut guidance for the year ahead, they say. Meanwhile, weakness in the Russell 2000 has taken it to the lowest level versus the S&P 500 since 2016, and it sits precariously close to the lowest level since 2009. Weakness in small caps has preceded broader sell-offs in the past. Most recently, the gauge. So what they're basically saying is that small caps, which tend to outperform large cap stocks and blue chips, small caps meaning small companies, basically. They say that weak performance in small caps or sell-offs in small caps has preceded sell-offs in the market at large. So the small caps are kind of the canary in the mine in terms of predicting the economic future. But I think a lot of this could change with a rate cut. I think that the Fed sees the same data everybody else does, and I believe that they're eventually going to go ahead and cut interest rates this year. Some people, for some reason, believe that it won't happen in 2019 at all. I don't believe that. I believe it's going to happen in 2019. But then again, maybe you're watching this video in 2020 and you're like, oh, he was wrong about it all. So anyway, it is what it is. I say just continue to be consistent, keep doing what you're doing, but just be aware of the economic indicators. You never know when a buying opportunity will pop up. But then again, I'm a big believer that every opportunity to buy is a buying opportunity because again, there's no better time, at least based on historical data. There's never been a better time to buy stocks than the present. Even if you were in a market that was going up or doing really well, if you bought stocks 5 years ago, I don't care if the market was doing great or doing bad, you've made money if you have a diversified portfolio, right? So that if that using that same logic, it would imply that the present is always the best time to buy, unless you somehow have a time machine and can go back to the past. If you go to the past, then that would be an even better time to buy, right? If that makes any sense. So anyway, hit the thumbs up button, hit the share button, hit the subscribe button. Today, I'm doing this video on June 25th, 2019. This weekend, I'll be doing a business summit, a 48-hour business school in New Orleans. So if you want to come by at the last minute, feel free to go to drboyceneworleans.com. They're going to be myself and 4 other experts. So there is a price point, but it's 2 days in a small group of basically other business leaders and business minded individuals, and we're going to get your business going and things like that. And then also I'll be doing an investment summit in Chicago, financial Juneteenth investment seminar that I do, and you can learn about that at drboycechicago.com. We rented a nice black-owned hotel in the South Loop, and we're going to use that for a day and teach you everything you need to know about investing. So anyway, I'm out of here, guys. Take care. Have a good day, and I'll see you soon. Bye-bye. Peace.